The market is a wild, untamed animal, chaotic and indifferent to human desires. Yet almost every trader who steps into its arena does so carrying the quiet, stubborn conviction that they possess some measure of dominion over it. That is the original deception, the illusion of certainty. The moment you place a trade, a subtle but powerful narrative begins inside your mind. You tell yourself that this particular configuration of price action, this confluence of indicators, this precise alignment of support and resistance is the one that finally unlocks the vault. You feel, in that fleeting instant before the position is live, that you have deciphered the code. And because the brain is an exquisite liar when its owner's money is on the line, it rewards that belief with a warm wash of confidence. But the uncomfortable truth is this, that confidence is counterfeit, and it is quietly draining your account long before the red numbers appear on the screen. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think, and how you trade. Let's go. Why do the overwhelming majority of retail traders eventually blow their accounts? It is rarely because they are ignorant of candlestick patterns, moving averages, or Fibonacci retracements. Technical knowledge is abundant and cheap. The real destroyer is the way the human mind distorts reality under pressure. Every chart you look at, every signal you receive, every piece of data you process is filtered through a psychological lens that is evolutionarily wired to seek patterns, even illusory ones. This mechanism once kept your ancestors alive when a rustling in the grass might have been a saber-toothed tiger. In the savannah, assuming order where only randomness existed could mean the difference between life and death. In modern trading, that same ancient software becomes a liability of catastrophic proportions. Your brain craves certainty the way lungs crave oxygen, because uncertainty registers, at a primal level, as mortal danger. So when a perfect double bottom forms, or when price kisses the 200-period moving average for the third time with bullish divergence on the RSI, your neurology lights up with relief, safety, control. This time I know. That sensation of safety is intoxicating. It quietly erodes your risk parameters. You increase position size, just this once, because the setup feels so compelling. You relax your stop loss by a few extra ticks because it's obvious price can't go lower. Then this. You abandon the discipline you swore to uphold during the calm of the weekend chart review. And then the market, behaving exactly as a probabilistic, chaotic system should, does what it has done since the first grain merchant in ancient Mesopotamia, it humbles the overconfident. The perfect setup collapses. The account balance flips crimson. You sit frozen, asking the same question every wounded trader has asked since markets began. What went wrong? Nothing went wrong with the setup itself. What went wrong was the unspoken premise that certainty was available for purchase at the price of a few hours of analysis. Here is the brutal fact the market will teach you again and again until you finally listen. The market owes you nothing. It does not keep a ledger of your study hours. It does not care that you have suffered 3 consecutive losses and deserve a winner. It is an ocean of liquidity moved by trillions of dollars, millions of participants, and countless variables, most of which will never appear on your screens. Your brain, however, cannot tolerate that degree of ambiguity. It constructs elaborate fictions of mastery to shield you from the vertigo of true uncertainty. And every time you buy the fiction, you pay the market's tuition. In real money, overconfidence is the second act of this psychological tragedy. After a string of green Candles on the equity curve, the same brain that once trembled at the thought of loss now swells with grandiose self-assessment. I've figured it out, it whispers. I'm different. I'm in flow. The old rules no longer apply to me. Dopamine, that ruthless neurochemical accountant, records every winning trade as evidence of personal genius. The chemical signature is indistinguishable from the rush a gambler feels when the slot machine finally sings. You are no longer executing a mechanical edge, you are chasing the next hit. Position sizes balloon. Risk management becomes an annoying formality from a former lesser version of yourself. Stop losses are ignored or removed entirely because I'll manage the trade. And inevitably, the market delivers its ancient corrective, one large move against an oversized, underprotected position, and weeks of progress evaporate in minutes. The cruel irony is that accounts are most often destroyed not during losing streaks, but immediately after the most euphoric winning streaks, when the brain is most thoroughly convinced of its own infallibility. The best traders, the ones who compound capital across decades, do not traffic in certainty. They inhabit uncertainty the way deep-sea creatures inhabit pressure. They understand that every individual trade is nothing more than a single bet in an infinite series of probabilistic events. They do not fall in love with their positions. They do not measure their worth by whether price agrees with them on any given day. Their self-esteem is decoupled from the random outcome of the next candle. They care only about process. Did I size correctly? Did I honor my stop? Did I follow the plan I committed to when I was calm? Discipline, executed relentlessly in the face of emotional chaos, is what separates the 1% from the 99%. Raw intelligence is almost irrelevant here. I have watched PhDs in mathematics blow accounts in weeks because their intellect could not override the primitive wiring that screams for certainty and control. So how does one escape this trap? The path begins with a moment of unflinching honesty so painful that most traders will spend years avoiding it. You must sit in silence and admit, out loud if necessary, I do not know what will happen next. Not in the next 5 minutes, not in the next 5 hours, not in the next 5 days. The ego will revolt. It will flood you with memories of past winning calls, with screenshots of perfect trades, with every rationalization it can muster. Do not negotiate with it. The admission of ignorance is the foundation upon which all sustainable trading is built. Once you internalize that truth, the question you ask before every entry changes from, will this trade win, to, what is the worst thing that can happen, and have I structured this position so that I will survive it? That single shift in internal dialogue is the difference between gambling and professional risk management. Most traders spend their careers chasing the pharmacological equivalent of certainty, the perfect indicator, the holy grail system, the mentor who will finally reveal the secret the banks don't want you to know. Let me spare you years of heartache. No such thing exists. Every edge eventually experiences to a losing streak. Every indicator produces false signals. Losses are not bugs in the system, they are the system. The winners are not the ones who eliminate losses. An impossible task, but the ones who have engineered their psychology and risk parameters so that no single loss, or even a string of losses, can remove them from the game. Certainty feels euphoric in the moment, but it is slow-acting financial poison. Uncertainty feels like nails on a chalkboard to the primitive brain, yet it is the only soil in which long-term survival can take root. You must train yourself to become comfortable, being uncomfortable, to fall in love with the discomfort of not knowing. That discomfort is the alarm bell telling you that you are finally Trading like an adult. Think back to your most painful loss. Strip away the monetary figure for a moment. What really hurt was the violent collision between your internal narrative, this was a sure thing, an external reality. The ego does not experience a losing trade as a neutral probabilistic outcome, it experiences it as an assault on identity. That is why revenge trading follows almost every large loss like night follows day. The brain, desperate to restore the shattered illusion of control, demands immediate action. One more trade, bigger this time, and the universe will be set right again. Of course, the universe has no interest in your emotional equilibrium. The second, emotionally driven trade usually compounds the damage, and the spiral tightens. Here is a practice that sounds simple but is profoundly difficult. Before you click buy or sell, force yourself to verbalize, out loud, I might be completely wrong. And here is exactly how much that will cost me. If the honest answer is, more, then I can emotionally or financially tolerate, reduce the size until the answer changes. If the answer is, it will hurt, but it will not impair my ability to continue trading tomorrow, then, and only then, execute. The professional does not need to be right on this trade. The professional only needs to still be in the game after this trade. Trading is not the art of predicting the future. It is the art of surviving randomness long enough for the law of large numbers to work in your favor. Your brain will spend the rest of your career trying to sell you the comfortable lie that certainty is just one more indicator away. Your job is to refuse delivery of that package every single day. One of the most insidious and pervasive psychological traps in all of trading is the illusion of control. This is the deeply ingrained belief that skill, analysis, experience, or sheer willpower can bend market outcomes to your desire. It is the quiet voice that says, because I have done everything correctly, price must eventually agree with me. It is the reason traders hold losing positions long past the point of rationality, muttering, it has to come back. It is the reason they add to losers, widen stops, remove stops entirely, or double position size after a winning streak, all behaviors rooted in the conviction that they possess influence over forces vastly larger than themselves. Control feels safe. Control feels like adulthood. From childhood we are taught that effort plus intelligence equals predictable results. Study hard, get good grades. Practice, win the game. Work long hours, earn the promotion. Markets are the first domain most of us encounter where that social contract is brutally revoked. No amount of effort guarantees outcome. The PhD who spent 300 hours backtesting a strategy can lose to the teenager trading on his phone during study hall. Accepting that reality feels like stepping into freefall. Yet the illusion persists because the alternative, radical uncertainty, is psychologically excruciating. So traders construct elaborate scaffolding to maintain the fantasy, more indicators, more confluence, more confirmation from higher time frames, more news filters, more correlation checks. Each additional layer is another brick in the palace of pretended control. And every time the market smashes through that palace without slowing down, the trader does not conclude, I never had control to begin with. Instead, they conclude, I simply didn't have enough bricks yet, and they double their efforts to build a stronger illusion tomorrow. Professional traders, bank traders, hedge fund managers with billion-dollar books, all lose trades regularly. If individuals with nearly unlimited data, instantaneous Execution, and teams of PhDs cannot control outcomes. What hope does the retail trader have? None. And that is not a counsel of despair, it is a liberation. The moment you internalize that you never had control over outcomes to begin with, you stop wasting energy trying to acquire something that was never for sale. The energy previously spent on prediction, manipulation, and ego defense becomes available for the only domain where control is actually possible. Process. Real control in trading looks boring from the outside. It is deciding in advance that no single trade will risk more move to 1% of capital. It is placing the stop-loss where the original thesis is invalidated, not where your account balance feels comfortable. It is refusing to move that stop even when every fiber of your being is screaming that it's different this time. It is walking away from the screens after 3 losing trades in a row, not because the market has defeated you, but because you have a rule and you are finally mature enough to follow it. It is taking a trade that meets every objective criterion even though your gut feels queasy, because you decided long ago that feelings are not part of the edge. The illusion of control does not merely cost money. It costs sanity. Every unexpected adverse move feels like a personal betrayal because you believed you had a deal with the market. I did the work, now you owe me the outcome. When the market inevitably breaks the deal, anger, shame, and self-doubt flood in. The trader begins to question not just the strategy but their own intelligence, their worth, their right to even be in the game. That emotional wound is the fertile soil in which revenge trading, overtrading, and account blow-ups grow. The antidote is relentless, daily surrender. Surrender to the fact that you will never eliminate uncertainty. Surrender to the fact that the market will continue to do things that make no sense to you. Surrender to the fact that being wrong is not a moral failing, it is the entry fee. The moment you truly surrender outcome control, you gain something infinitely more valuable: self-control. Losses cease to feel like indictments of character and become simple data points. Wins cease to inflate the ego and become equally neutral data points. You judge yourself not by whether price did what you wanted, but by whether you executed the process you committed to when your prefrontal cortex was in charge. The market is a storm. You are a sailor. You cannot command the wind, calm the waves, or dictate when the next squall appears. You can only reef your sails appropriately, keep your bilge pumps working, and steer according to your compass even when the stars are obscured. Most traders spend their careers screaming at the storm to behave. The few who survive learn to adjust the sails and keep sailing. Every trader wants to believe they are the master of their domain. They draw trend lines with religious precision, circle supply and demand zones in multiple colors, layer indicator upon indicator, and then sit back with the quiet satisfaction of a general who has just positioned every troop perfectly before battle. The illusion is complete: I have prepared. Therefore I have power. Therefore price must obey. It is a seductive story, one the mind clings to because the alternative, admitting powerlessness in the face of trillions of dollars moving for reasons you will never fully understand, is terrifying. But the market is not a respectful opponent who honors preparation. It is a blind, chaotic process that chews up certainty and spits out humility. Flash crashes happen. Central bank surprise. Whales dump billions in the dead of night. Earnings reports leak. Wars start. Pandemics arrive. None of these events send you a courtesy email asking whether they fit neatly into your analysis. They simply happen, and price reacts. The trader who believed their analysis granted them control experiences these moments as personal violations. The trader who never harbored that illusion experiences them as Tuesday. You can only control two categories of things in this game: your actions and your exposure. Everything else is noise. Yet 95% of traders spend 95% of their time and emotional energy on the noise, tweaking entries, hunting for better indicators, jumping time frames, scouring Twitter for the next guru who promises the missing piece. They are trying to solve an unsolvable problem: how to make an inherently uncertain process certain. Meanwhile, the actual levers of survival, risk per trade, maximum daily loss, adherence to predefined rules, sit ignored. Because pulling those levers does not produce the dopamine rush of believing you have cracked the market. The illusion of control manifests in countless subtle ways. You widen a stop loss, just this once, because you are certain price cannot possibly go lower. You add to a losing position because you are convinced your original analysis remains valid, and the market is simply wrong for now. You remove a stop entirely because I'll manage it manually, which is trader speak for I refuse to accept the possibility that I am wrong. You increase size after 5 consecutive winners, because you now believe you have entered a higher state of market consciousness. Each of these behaviors is a prayer to a God that does not exist, the God of outcome control. The professional trader does not pray. The professional trader calculates the cost of being wrong before the trade is taken, accepts that cost as part of doing business, and moves on whether the trade works or not. The professional is not smarter than you. The professional is simply willing to live in reality 100% of the time, while the amateur keeps trying to negotiate a better deal with reality. The moment you let go of the need to control outcomes is the moment you gain actual control. Control over the only variable that ultimately determines your survival, yourself. You will still feel the ancient urges. Fear will still whisper when a trade moves against you. Greed will still roar after a string of winners. Hope will still try to convince you that, this time it will come back. But once you have seen these impulses for what they are, evolutionary artifacts in a modern arena, where they no longer serve, you gain the power to observe them without obeying them. You watch the fear arise, nod at it, and cut the loss anyway. You watch the greed swell, smile at it, and take profits according to plan. You watch hope bloom, thank it for its concern, and close the position when the original thesis is invalidated. That is true control. Not the childish fantasy of commanding price, but the adult mastery of commanding yourself in the presence of forces you will never command. The market will always be larger, faster, and more ruthless than you. But if you can learn to sit calmly in the cockpit while the storm rages, adjusting your risk, honoring your rules, and refusing to fight battles that cannot be won, you will outlast 99% of those who came before you. And that, finally, is the only form of control worth having.